The reason we're having a train wreck is because it didn't used to cost $60,000 to put on a tile roof. But if you live in a neighborhood with a deed restriction for a tile roof and you have a 5-year look back and the insurance company says you have to get a new roof, you may have just lost your house. Right. You may have gone from having a house that is your equity and your future and your retirement and your safe haven to nothing, and you owe the mortgage person.
Hey, welcome back to the Real Estate Excellence Podcast. Today, I have a returning guest from episode 168. She's an author. Her and her husband are active and successful real estate team in the greater Tampa Bay area. President of the Pinellas County Board in 2018. She is part of the National Association Realtor Leadership Academy, international speaker, and ultimately what this podcast will be about is her insight from her position as chair of the National Association of Realtors Insurance Committee. Insurance has become a big factor in the home buying process. What's going on? What can we do? What new legislation is being worked on to lower the cost of insurance? So let's welcome back one of my favorite guests, and she is full of knowledge and insight, Cyndee Haydon, to the show. Cyndee, welcome.
Thank you, Tracy. It's a pleasure to be here. You do such an amazing job. So thank you for what you do for our industry and helping people get past the sound bites and really dig into the meat of what's happening and what they need to know.
Right. I appreciate that. And to bring on, the honor to bring on someone like yourself who is there in the action, and you're not a sound bite off to the side getting water cooler talk. You're actually talking to people who are actually moving and grooving, which we'll talk about here, whether it's in Tallahassee or at Florida Realtors or at the National Association. So I appreciate you coming on and spending time with us this morning. I know you're campaigning for secretary for Florida Realtor in Orlando, and I know you've been traveling around. You were down in Miami, I think last month or just a few weeks ago. Yeah. And want to know, what are you hearing from the agents, that's out there, and maybe some new insights that hopefully you're going to take into the board next year?
We're definitely hearing the impact that the cost of insurance is having. We had meetings in the Panhandle, and a gentleman shared with me that his homeowners insurance, personal homeowners, had gone from $1,800 to over $4,000 in 2 years. And I know you and I are going to talk about some of the reasons why, and are we seeing a shift or a trend back to stable to lower? In South Florida, a lot of the realtors there talked about the impact of commercial and how it works differently. And so when these insurance costs rise, what the impact is. I actually had the opportunity yesterday to hear from some experts in the commercial line talking about different creative ways to cover commercial buildings, almost like a health insurance where if you don't use it, they repay some of the rates back to buy it again, right? So there's a lot of things people are thinking creatively, but there's no doubt that the challenge right now in affordability, a huge piece, and the one unpredictable piece is what will the insurance be the next year or the next year, right? And so that's what we're helping people sort of feel through. As I work with buyers, that's definitely something they're really focused on.
And from the mortgage side, it could be qualification. It could be someone's budget, whether or not, all of a sudden we come back and getting insurance right at the beginning of the process is oftentimes important on a particular house they're looking at. You're mixing and mingles also with our National Association, as chair of the insurance committee, but I just wanted to, kind of kick off because I'm sure it's a question you're asked about every day. So we might as well hit everybody in the state here, or all of our listeners. What are you hearing out there from some of the top agents of the proposed settlement and how they're going to attack it? And just, what's your personal opinion on it?
First of all, I think that the assumptions that were made in the court case, and I'm just speaking for myself, Cyndee Haydon, a realtor in Tampa Bay, not for any organization, but I feel the assumptions that were made, there was a lot of myths put out there in the news, in the conversations. There have been some people like Budge Husky that have done a great job at really dispelling, truth and fact from myth. Interestingly enough, I think that the biggest one is around somehow commissions drive what the realtors do for their clients. And we've seen data out of Bright MLS this week. And I have a friend that has Stellar MLS for Hillsborough and Tampa data that shows the exact same thing, right? That the buyer designates to us what they want to look at and buy, that the commission often is higher on a lower price property than a high price property, which means we would get paid less, not more. So again, we're doing the right thing based on what the client wants. And then they had a focus group that said, could you do this alone? Would you do this alone? 90% said it would be really, really hard. And they appreciated all the invisible things that go on that people don't realize when they only buy a house every 12 to 13 years. Mm-hmm. I do think that the positive side of the settlement for me and for other people is that the market we came out of was moving so quickly. You know this from the mortgage side, that we were sort of like, we saw a house, I'm writing the offer in the car, on the side of my car, getting in the line. And I noticed, I just stepped back for myself. There's 114 terms in the contracts that I help negotiate for our clients. And we were operating so fast, I realized I had not been properly explaining to them the why. Why would we do this? And how am I using my knowledge and experience to do that? And so what it's really doing by everybody as a buyer will hire a realtor and they will have a conversation and hopefully talk about the journey and the process and the 10 or 11 steps to get to the closing table. I think people are going to feel better about the process. They're going to have more information. And what we're really doing is breaking the cycle of online people like Zillow, Realtor.com, Homes.com, pick it doesn't matter. But they set up the buyer of what I call search and show. Hey, I see it. Now you show it. And really, as we know, and actually the data Chris Smith put out last week was only 2% of buyers on Zillow are buying houses. So it's fun. It's entertainment. It's just like when I go on QVC and I go, what would I like? Or Amazon. But it doesn't mean that that's the best way to buy a house or that's all there is. And from there, somebody just puts numbers on a contract. So I do think that we've been asking for an elevated professionalism for a number of years. And we haven't known how to get there. I think this will force the realtors to have a higher level of professionalism, and it'll give the space, because everybody has to play by the same rules, to make sure that consumers are getting the best information. They're making a smart decision and not just whoever answered an inquiry about a house online. And then going through the process, I think they'll have a better experience. So I really think that we're going to look back on this in a few years and say, wow, that was the unintended consequence, was really getting the consumer great help. And they didn't even know how to gauge that help before, because they were just trying, hey, I see something, I want to go, and I see it, show it. And then you're stuck with somebody that may not have the skills that you wanted. But it all happened so fast that now you're by default, represented by an agent that you never really took the time to maybe ask the right questions and make sure that that was the best fit for your needs.
Well, it's like every salesperson. If someone's ready to close, you close. You don't have to continue going on and explaining all the benefits and so forth, because they're basically saying, I'm ready to buy. Here, where do I need to sign? And we skipped all that in between. I agree. And I think forums like this, agents getting out in the social media aspect, creating their YouTube pages where they're showing an idea. I came with a podcast a few podcasts ago, was keep a journal of everything you do with your client. Those 8 o'clock calls where you're basically being a therapist, the ones you had to go in and clean the toilet and sweep the floors, vacuum and everything before the open house or a showing or photography, all those little things, because you need to express. A lot of people don't understand. Like I said, when we talked about this before, it's an iceberg, and all that stuff that's under the water you don't see that agents are doing. And really, I think they're going to gain credibility. And like you said, slow down a little bit and smell the roses, so to speak, and explain some of those things that buyers need to know and sellers.
Absolutely. I think it's going to, again, I think there are going to be probably less people being members of the NAR. There's 1.5 million. In 2012, there were just over a million. So that's, quite an increase. But again, what the consumer doesn't realize, and so this is where I think there's going to be transparency, is that only 25% of realtors sell 6 or more homes a year. 6 or more is not that many to have the experience to guide somebody. But let's just say 5 and below is really a limited experience, right? And so 75% of people, many of us would argue, like, is it full time? Do they have the experience? Are they with somebody that can help them? And so when you're a consumer and it's your largest purchase, getting people that are skilled and experienced, most people would say that's what they want, but that's not what most people are getting.
Yeah, I agree. Switch subjects. Our governor came out and it's actually going, I'm listening to sound bites all over the country, this anti-squatter legislation. What's all the realtor friends out there? What's the talk? It seems to be positive. Do you see it as a positive thing? And obviously being with the National Association, seeing some of this legislation, other states taking similar action.
Well, I think it's very needed. I think that most Americans cannot imagine that you own a home, somehow somebody gets access, even if it's breaking in, and you now have this laborious, time-consuming process to reclaim your home. I'll tell you where I've seen it come up, and it's a concern, is when someone passes away and a home's in probate, and somebody, that's one of the first things is you've got to secure the property. You've got to manage it because of that, the risk of squatters and the risk of now having to reclaim the property that's yours. And of course, obviously realtors are totally defending private property rights. And that is a basic private property right. It is your property, and somebody should not be able to just break in and then claim it. And so I think there's been some fraud out in the online world that has put some unfortunate victims in a bad place, meaning someone advertises a house for rent. It's not really for rent. They pay somebody some money. And while I feel sorry for them, it doesn't negate the rights of the person that owns the property.
Right.
And so I think that Governor DeSantis and Florida are on the right side of that. And I think that that's another reason you continue to see people comfortable investing in real estate in Florida. So again, I think overwhelmingly people are supportive of it.
It just gave me a thought of that part, as I know that kind of thing's been going on where someone acts as if they're the owner, they rent it out, they're collecting the money. Meanwhile, a couple months later, the owner, if it's not longer, the owner finds out these people are living in this house and, well, who are you? And they said, well, we rented it from John. Well, John doesn't own the house and that sort of thing. How important is maybe to have a real estate agent, a professional that's going to make sure John owns the house, and in having representation on the front end, going in and negotiating. That's just another reason why a real estate professional is needed.
Absolutely. And even we've now, as realtors, taken extra steps, because many times someone will approach us about listing or selling a property and confirming that ownership, and confirming, especially when something might be in a LLC, right? Seeing those documents, ensuring that someone has the right to engage somebody to rent, lease, buy, sell those properties. So I do think that, unfortunately, there are people that if they put their energy into something productive, they would probably do great. And for some reason, they tend to focus on these ways that are taking advantage of other people. It's unfortunate. And so again, having the ability to have people know how to look after that makes a big difference. Yep. And it's interesting. We just had a client who had inherited a property, but Florida law says you have to file the will in 10 days in the county where someone passed away. They lived over in the Space Coast. They didn't do it. Let a couple months go by, and the sister of the person that passed away filed for the property. So we had an all cash buyer, and in the middle of title, we're like, oh, we have a problem here. And it could have been avoided, again, if we'd have talked about it early and gotten through that process of, these things need to be in place, right? So it really is, the resources that we bring to the table help in many aspects of the process.
Yes. Yes. All right, we're going to switch to our next gear, and we're going to get into our topic subject here, insurance. And I wanted to ask you, as I was putting my questions together and doing the research, you're chair of the insurance committee. I wanted to just ask you personally, obviously you're very dedicated to the profession. You are very involved in many aspects, keeping informed to educate the others, and you've made yourself a point person. But why insurance? Is insurance something that you have just a interest in, or it was just an opportunity to, carry on your leadership and they needed someone to lead there?
Well, thank you for asking, because it's very personal. When I was in college and after college, Hurricane Andrew happened, my best friend and roommate lived in Miami and lost everything and lived in a trailer with her young children for a couple of years while it got rebuilt. And so I saw what happened when a whole community has something happen. Prior to that, or in that time frame, on Christmas Day, we had someone break into our home and lost everything in a house fire. And I had really good insurance. And so while emotionally, my baby pictures, my college things were all gone, my ability to be financially resilient and get my family back on our feet was made possible by having good insurance and had that risk transferred to the ability to get back on my feet. The third thing that happened was when Bigger Waters happened in 2012. Congress passed a law to say we've been charging not actuarially correct rates. We're going to go to the full actuarial rate in one fell swoop. And they did it retroactive 6 months. As a realtor, there were people I had sold in the previous 6 months that had bought in a flood zone property. And all of a sudden, their flood insurance went from $1,400 to $14,000.
Oh my God.
No escrow, no deductibles were allowed at that time. And I had a retired veteran look me in the eyes with tears and said, I didn't do anything wrong, and you just foreclosed on me. And I just am super passionate and understood early on that insurance is the housing affordability third leg of the stool that people often overlook. And obviously now it's gotten really painful, so people are aware, but I've kind of been shouting it from the mountaintops for 7 years, and mostly because we're equally damaged if our neighbor's not insured. So really it is something where we want everyone to understand how to be resilient, how to get back on their feet, because if our house is full of mold and not fixed, it's not going to help us. And so again, it's yes, do we want to do this for all the right reasons? But there's a very pragmatic neighborhood family reason that speaks to my heart and why I care so deeply about it. And so I made a commitment to try to do everything I could to educate people, to make the right decisions, and to be as protected as possible going forward.
I don't think many people think about the neighbor part of our, in the overall thing. We go back 15 years ago, 2000, well, not even 15, 2008, 2009, when the foreclosures were going on, and how that affected, to have a house. And we had a house next door to us where, divorce, she just walked away from it. I mean, she literally left her wedding dress in the closet, from what I understand. And, the yards go, to weeds, to dirt, and, it's not good for the community. It's not, you're sitting next door. If you had to sell your home and someone's coming to look at it and they're looking at that house next door and they're like, when's this going to happen? When's this going to, get fixed? I mean, thank goodness now for the most part, the foreclosures are washed out. I mean, there's still foreclosures that go on for other reasons, but it was rampant. I mean, I had one across the street that happened and one next door that happened, and we actually bought a foreclosure. So I mean, when those things go on, we think, you think about foreclosure, but insurance is the same thing. We have a storm come through and the house is damaged and they're not properly insured or not insured at all. And all of a sudden that house is sitting there and maybe they're walking away from it. And,
right.
there's investors that may invest, but who knows how much they owed on it. And then is an investor going to buy that? And then, what's it going to cost to fix it up? That could sit there for years like that, and that can happen in any neighborhood, especially I imagine some of the beach communities where they might get damaged more, should a hurricane come through. I'm sure Fort Myers is still dealing with that situation right now where people were underinsured. I want to start off, and I know we're going to cover a lot of different things, but the citizens is brought up a lot. I don't think, and I really didn't understand until I started reading some of the articles, because I've heard you've mentioned it. I've heard other people mention citizens, but what role does citizens play in Florida insurance? And I don't know, I guess I would say it's from reading between the lines. If it wasn't for citizens, a lot of people wouldn't be insured in Florida.
That's true. It was designed to be the insurer of last resort. And what happened was Florida was unique in the country. We had a loophole that was designed to protect our residents and consumers. It's called the one-way attorney fee. And so what happened is some lawyers figured out how to leverage that to create claims, to expand claims, to raise the costs of these lawsuits. And so what happened was, while we had citizens picking up some slack over the last 7-8 years, it went from that being a minor player to a major player as traditional insurance companies tapped out because they had lost so much, right? I mean, I think the numbers were $1 billion a year the last 5 years. Now, the good news is the trend's reversing, and we're seeing for the first time citizens report positive in the black. So that's a positive thing. But what happened was two things. One is it was the insurer of last resort. People started pulling out. So then the options of new people buying houses was like, okay, they'll take it. Okay. When other people said, we won't do it if it's this old, we won't do it if it has this electric, we won't do it if the roof is this age, citizens would. Now, here's where we got into a little problem. Back when the market in like 2012 we were coming out of the short sale and just what you talked about, all those crises, they put a cap on how much citizens could increase, which was 1% a year. So what happened was we stopped really having that actuarial balance. And so while it was supposed to be the insurer of last resort, all of a sudden today it's often half the cost of other insurers. So consumers trying to get in, and with the mortgage, you're trying to qualify them. Yeah. You're like, hey, if I can get you half, it may not be as good and robust a coverage possibly, but you can get in the house. That is kind of what we saw just explode the last 4 years in my experience. Mm-hmm. So then they got to a point and they said, look, the reason that they're all able to get away at 50% is because they don't carry that reinsurance that a traditional company would have to do to be able to qualify to be your lender, to be able to say, yes, you are able to loan on homes and we will allow you to be the insurer. So they realized if we have a really big claim, and obviously you've seen hurricanes, it's like spaghetti across Florida. They can come in one way and come across the state and back across. So the potential for really big losses here is significant. And so they said, we gotta depopulate. So they have been in the process, and we'll talk more about what changes have been made to make that kind of happening. But basically it is the insurer of last resort. They have had to be not actuarially sound because they've had limited ability to raise their rates. And last year they made some changes that we can talk about, but it has been the insurer that actually would insure most of our older housing stock when other people the last few years have said no, because the risk of a claim on a house that's 1980s and a water pipe breaking is much greater than a 2024. So that's been the journey. Hopefully that helps. One of the list of things that cause some of the cost is reinsurance. You said citizens wasn't required. Explain reinsurance and how it applied to citizens here. Who was their reinsurance? Every resident of Florida, regardless of who you have for insurance. So if you have State Farm, if you have Allstate, if you have, various ones, TAP, Slide, it doesn't matter. If we have a loss and Citizens cannot pay it, they have a mechanism to put an assessment across every person that has insurance, car insurance, everything, to get that money back. So we are all, in effect, the reinsurance, but most people don't understand that. Most people do not understand that you are the reinsurer of every person that has a Citizens insurance policy.
So if I'm hearing you correctly, Citizens is in the red because of the claims having to be paid out versus the premiums coming in. The state is basically requiring all the other insurances in there to collect a certain amount to pay into this pool. Am I kind of simplifying that?
Actually, you're getting into the weeds that I can't, but what I can say is this. Let me say different. First of all, at the end of 2022, we're seeing the first time that Citizens is in the black for a number of years. So we went from 2.2 billion in the red to a little over 700,000 in the black. So one, we're making progress. I just want to be clear on that. Two is that if we had a really big loss, so imagine you had a car accident. Normally you're paying a deductible and you guys are working it out. In this case, you go, well, I don't have the deductible, I can't pay this, or I don't have the insurance. And they say, okay, well, everybody in Future Home Realty has to pay it for you. Like, people don't think that they're going to cover your loss, right? But everybody, it's like just unilaterally, everybody's going to cover it, or every realtor or every mortgage person. So it's that way for every person that has an insurance policy of any kind in Florida could be on the hook for an assessment. Now, that assessment is sort of like in a condo. It's not automatic. You're not, but if something were to happen, and there were some concerns, and there were actually some things they were working through, that there could have been a small assessment after Idalia, because they were concerned about some things, but they didn't. But again, if we had something large, they would be able to do that, and everybody's bill might have $1,000 extra on it, right? And then they would cut. That's where they would get that money from. But the normal insurance company isn't allowed to do that. Now, just to go full circle, because in the mortgage arena, Fannie, Freddie, FHFA, they cover 87% of the mortgages or some such, maybe more, right? So they have to approve your insurance. The state of Florida last year, when they made the changes, went to them and said, we want to be able to sort of do this reinsurance plan. We want to do some things, give us some time to clear this up. The federal government felt like they were on the right path and actually did approve that for the first time in history. So they gave them some bandwidth to get this stuff on this trend that it was more in line with what you would expect healthy insurance management, risk management to be. So again, that was a big plus.
Well, to kind of level off, like I said, they start getting in the black. They're not having to, I'm going to call it a surcharge right. Everybody for everybody else.
Right.
Now to make up that 2 point whatever billion that you said they were in the red.
Right.
Yeah. To kind of level the playing field, so to speak.
Right. I will say one thing on the national level was that, you might remember Congress was battling on passing a budget where again, we've took quite a long time. But flood insurance was, set to expire, but it did get reauthorized. So again, that is important for everybody that gets a mortgage in a flood zone. And now in Florida, we didn't say it, but Citizens now requires every policyholder to have flood insurance. So if you're a new policyholder and buying a house and you're getting Citizens, you would be required to have flood insurance at the time of purchase. And now we're in this period of phasing in $600,000 valued homes, where last year 500,000, 400,000, 300,000, and everybody. So we have a 4-year plan. And so when we talk about 1.4 million people in Citizens, just to give you an idea, all the people that are required to have flood insurance in the country is 5 million. We already had 1 million of those insured. And now you have another 1.4. Now it's down to like 1. So it's almost doubling the amount of people covered in Florida with flood insurance, and a large portion of the coverage for the United States. So again, having that flood insurance reauthorized is really important for us.
Knowing what you know throughout the state, and I was at a was down in St. Johns County. I forget what the county representative was there. And I think they were talking about at that time, the flood maps were changing. I don't know, this is 3 or 4 years ago, maybe. And their recommendation was, if you live in Florida, you should have flood insurance.
Right.
What is your personal opinion from Miami to Pensacola, Jacksonville to Naples? I mean, what should everyone have some sort of flood insurance?
Well, I know this might be a news flash, but we are a peninsula on a peninsula. And so obviously the threat of flooding is everywhere, and X is a flood zone. It just says it 1 in 500. But the thing that I learned working with NAR that most people don't know is the reason that 40% of flood claims often happen outside of where you would think of coastal and flood designated areas is because FEMA has never accounted for rain and precipitation. And so really the projection is that twice as many people, if 5 million people have flood insurance today, it really should be 10 more. I think the answer is, homeowners insurance does not cover rising water. And many people find out too late, assuming, which is really kind of dovetails us into the new flood disclosure that every person will be getting. But yes, it is smart. And it should be actuarially accurate. And so here's the deal. If you are in a non-required flood zone, an X zone or an X500, and your premium is high, meaning closer to 4,000, you are in a high risk area. You just get the benefit of getting to repair your home, where someone like me living on the coast has to manage to a 50% rule. And at any time I could lose it all based on a claim. Mm-hmm.
We're on the subject of citizens still here, and imagine part of leveling that playing field, getting citizens to black instead of being in such a billions of dollars in red, is this depopulation in trying to read in it. Was it if the policy's within 20%, they want you to move over to a private insurer?
Right. I think the important thing for every homeowner to know that has property insurance is you may think you're on Citizens and you are not, you're up for renewal next November, let's just say. And if you're like me, you get stuff in the mail and so much of it's junk, you just ignore it. And what you really have to be vigilant about is you are getting offers from other companies, and it could be more than 20%. If you do not open that and decline it, you could find yourself at a much higher rate than the 20%. So I think that's a really important tip for people right now to know. Now, if you open it up and it's under 20% and you don't have a choice, you must accept that and leave Citizens at the renewal. But the bigger scary thing is that the average consumer doesn't realize that, okay, they might think, okay, well, they're going to put me in something, it's within 20%. I'm not really worried about it. But there were people back in December who were getting offers that could be 40, 50% higher than what they were paying. They did not open it and deny wanting that, turn it down, and they got out of Citizens and into that offer without realizing it.
Well, I mean, obviously, how do you differentiate between what's just an advertisement to get you to call, right? Everything's free. You lower your insurance just to get someone to call and actually inquire. Or are these legitimate offers that they're getting the information through Citizens and making the offer, the private insurer making the offer? Is that what's happening?
So here's what I do, and I would encourage other people, is you always want to go straight to your agent, right? And I have an agent, not just the company. So I have an agent that I would call and ask, is this legit? And what is this? And do I have to do it? I got taken out of Citizens last year to TipTap. And again, when it came, it was within that 20%. So I knew that was going to be, but there were other things and other people I was hearing and seeing online that came before that were more than 20%. So again, just making sure that consumers realize that no matter what you got in the mail about it, I would be calling my agent and just say, hey, tell me what I need to know about this. If they say throw it in the trash or just mark no or call and say no, whatever they tell you to do that. Can I share one other quick tip that I've learned that people might be surprised?
That's why we're here.
So a lot of times people, obviously we're not insurance experts, and something comes up, maybe a storm, and you have a question like, hey, if I get water in my window, is that covered or is that flood insurance, right? Like older people who have lived here often will have questions and they would call. So let's say you call State Farm or you call Progressive and you didn't call your agent, you called the company, like they give you this handy consumer line. When you do that, you literally have a claim on your property now, a zero claim, but you have a claim against your property. And some people that are super nervous and worried and kind of always want information might make multiple calls and have multiple claims and get canceled because they're a multiple claim and they don't even know what they did wrong. Can you believe that? So always,
I do,
always
but I can't.
call
I don't
your
want
agent. I know. So if I have one tip today, it is call your agent and let them give you advice. And if you have questions, call your agent before you call the company because you really could be shooting yourself in the foot.
Wow.
Yeah. Yeah.
Oh my, that's almost like the trigger leads, in the mortgage world, we go pull someone's credit and the credit bureau sell it to everybody. Right. And also that's the first thing that came to my head when you were saying that. I was like, oh my goodness, the fact that, where else can they get a few more dollars? Right. And to me, that's a consumer, we have the CFPB. Where are they at with that? That just because someone called and asked a question, they could have been sitting at dinner one night and challenged their cousin to that question and it had nothing to do with their home.
Yeah. I'm not even sure how it's treated if I were to call them and say, if I put in new windows, does that help? Like I'm literally like, I do not do anything without talking directly to my agent. And if you don't have an agent, you may want to consider as you go through that, figuring that out because all of us can have an agent. So talk to a local realtor and find out who they would recommend because they are going to be just like we are in real estate, just like you are in mortgage, Tracy. They are going to help you navigate the best way to not work against yourself.
Well, I mean, for the agents that are listening here to this right here, this is something you need to be putting down in your notebook and educating especially these people coming from out of state who don't understand, Florida insurance in general, how it's a little different than the other states coming in. But that little tidbit right there, I mean, that's my goodness. I don't know where to go with that.
I know, but I thought we'd throw it down and give somebody some value today. So that's probably not something they knew.
That is 100% value. Oh, wow. All right. So there was some, well, actually, all right, I'm going in order here. Nearly, in last year, we saw nearly on average a 25% increase in premium statewide. South Florida has had their greater challenges. They're the high end of those premium changes. There are several factors. We talked about reinsurance being one of those factors from the private insurance, getting off of Citizens and talking about the private insurance part. We talked about pre-show. We wanted to get in, why is Florida, besides we know, especially in South Florida, there's a lot of fraud in all aspects, whether it's Medicare, Medicaid, all that kind of stuff. There's a lot of fraud that goes on. Why is litigation so much higher in Florida than any of the other 49 states?
Well, hopefully we've changed that. The reason that litigation was higher in Florida is we had a very consumer-friendly rule. It was called a one-way attorney fee legislation that said, hey, I'm David and you're Goliath, Mr. Insurance. And so if I can sue you and get $1 more than what you offered me, you have to pay me and my attorneys. And so it was really, really designed for the little guy like us to say, make sure the insurance person and the companies treated us fairly. And somewhere along the line, about 7 years ago, there were attorneys in Miami that figured out a way to basically do assignment of benefits. So it started with maybe I had a water claim in my house, and they would just go straight to remodeling and a lawsuit and not go to the insurance company. When you have a car accident, what do? What's the first person you call?
The insurance company.
Right. When you have a water claim in your house, what would be the normal, you would think, the first person to call?
Well, besides, someone like Service Pro to come suck the water out in your insurance company.
Right. Well, this whole trend started where citizens on like 90+% wasn't even hearing of a claim till they got served with a lawsuit. So it wasn't like they weren't treating people fairly. It was lawyers who figured out they could assign these benefits, they could inflate the fees of what it cost. And so basically what happened was insurance, as you talked about, actuarially they figured out what should losses be, based on Mother Nature. But what nobody ever could figure out, and we still can't, is death by 1,000 lawsuits. And so it just got to be bigger and bigger and bigger and more fraud. And really that's where first was the assignment of benefits and the ability for somebody to say, hey, I can get you a new roof, a free roof, just sign this over. And so they changed the way those are done now, where people would have to pay their part up front and it can be reimbursed, and really trying to have the insurance company and the consumer working together to do the right thing, but not inflating it by a third party kind of guiding people in a weird way. So it was really, really unfortunate.
The assignment of benefits. I have the water damage in the kitchen. I've got a claim. They're assigning, when you say assigning of benefits, walk through what's happening there.
Sure. Thank you. So when you assign your benefits, let's say you have a water claim, ServPro comes, contractors come. The average person we know is often living paycheck to paycheck. And you're thinking, how am I going to pay for all this? And I don't know, most contractors want money up front, right? And so that's where the dilemma was. And they said, hey, don't worry about it. Kind of like when you go to your doctor about health insurance, we're going to go submit all the claims to insurance. We're going to go take care of this for you. So basically, that's what they said is sign this, we'll take over and we'll do everything and get this taken care of for you. And so the consumer was getting the house quickly repaired and not having to have those out-of-pocket costs up front. And then a lot of things happened through the process that turned out to be not the most efficient or economical way to get that done. And eventually, the thing about fraud is twofold. If you have a water claim, the average water claim is $30,000. But, like if you have a water claim in your kitchen, they will replace the cabinets on the bottom that got damaged, but they don't replace the ones above. So again, some of these things would be like, hey, I'll do the whole thing. And so what would happen is an adjuster from the insurance company didn't even see the damage or what was there until after the fact. They're getting these receipts, they're seeing a finished kitchen, and they're getting a bill and an attorney says, pay it or we're suing you. It was just a hot mess.
Yes.
Yeah.
I can see that in the, years ago, it seems like almost 20 years ago, being in a car accident, a friend of mine referred me to one of these lawyers. They immediately like, hey, go see this chiropractor, and you're getting massages and all this chiropractic thing, and you're assigning those benefits over, and they're going after the insurance company to get whatever they can get out of. Some they'll win, some they'll lose, in what they cost, but they got this fixed cost of their employees anyway, so they're just running you through there. And I don't know I never did see obviously that the insurance company took care of that chiropractic bill, but I don't think I needed anywhere near what the actions that were the amount of times I went there, type of thing. And now I see they're assigning that over to that contractor, and the contractor's rolling the dice to win that legal action they're taking. And obviously the attorneys are involved in there as well. Yeah. Wow.
So here's how so you could look at it and go, okay, in traditional sense, somebody had a water claim, there's work that needs to be done. And in effect, that might be a little less efficient. But here's where it started to go really wrong is people would start to come up, and even they have pictures of people going on people's roofs with like golf shoes. And they're like, oh my gosh, this has been hit by hail. We can get you a whole new roof. And again, as we looked over time, the last 7 years, the cost of materials, the cost of labor, and then also the cost of lawsuits really escalated the pricing of things. And so that was where we just saw it go crazy. And that is why when you hear things like insurers don't want to cover roofs older than 10 years. Now, we passed a law that it's 15 now last year. But the reason was, if you have a roof older than 10 years, most people are very susceptible to someone coming and offering you a free roof. And so again, they're like, the older the roof, the more people know they're going to have to pay it. Why should they be gaming an insurance system to get a roof? We're not a home maintenance program.
Right.
We're supposed to be for catastrophic loss.
Right.
The other piece is Florida had a situation where, if any of it was damaged, you had to replace the whole roof. And now there's a lower threshold that some repairs could happen. But again, I think the thing that we need to take away is some consumers benefited, but all consumers lost, because you see how we've had a lack of choice. You see how we're all paying exorbitant more prices. There is no free lunch, and we all know that. And this has just been borne out when basically we broke the system in Florida. And the reason it is that of every dollar that an insurance company paid out, I think it was $8 that the consumer got. That's just wrong. I mean, $8. So less than 10% of it went to the person to help them with their house. Just shows you how much was over the top for litigators, contractor, everybody but the consumer.
So as some of these changes are going on, the positive thing is now, is we've had more insurers, competition come in. That's the positive note is some of this legislation has worked its through. Some don't think it's enough yet, which I don't know. You can give your opinion on that, but just bringing in natural competition to drive price down.
So I think that we have 8 new insurers that have come recently, and I think the fact that people are willing to come back in says that they think we're on the right path. Just like when, Fannie and Freddie said, hey, we're going to support you. We think you're on the right path. Why that's important is, think about it. Insurance companies for 5 years went to work every day, and they had to pay money for the privilege of working, right? They were in the red. So it says that they believe that there's an opportunity to have to be in the black, right? Well, you don't operate a business. We're not a charity. There's got to be the prospect of that. So I think that is a good sign. I also think that what we're seeing is litigation has dropped, insurance is increasing, options are increasing. And so we're getting a stabilization, which is the first step. We've got to have it stable. We need to, and I think stabilization is an important step, because when you work with a buyer, Tracy, or I work with a buyer, I have to be able to give them some expectation about year 2. How do you get in a house and you're getting people in there and they're a teacher, a firefighter, a policeman, that they don't work on commission like us. Like, we could hustle and sell another house, mortgage another, we could get another paycheck to pay for it. But, how does the average person go from $1,800 to $4,000 and have any ability to really pay for that? So now I think we can see stable. And what stable looks like to me when I look across the country, because of inflation, because of labor, because of the cost of goods, about 10 to 12% is what other states that don't have issues. That's kind of what you're going to see is we know that this year it's going to cost more to do a kitchen than it did last year, right? We know that. Labor, we know that. And inflation is like almost at 5%. Being at 12%, 10 or 12% is something that also isn't going to break most families. If your bill is $2,000 and the next year your bill is $2,200, like, you're probably not losing the house over that. Mm-hmm. But when you face, again, especially first-time home buyers, seniors on fixed income, staying in that house, when you have a $2,000 increase, or you have, that's $200 a month that they got to decide between medication and food. Right. It's really impacting people, and we're seeing that in a slowdown. I think it's the number. I think it is a bigger reason in Florida why fewer homes are selling than the interest rate, in my opinion. Even because I can help a buyer buy down an interest rate. You and I can do that together, right? We can get them in and then they could refinance. There's ways, there's nothing I can do about insurance. Now we're going to talk about My Safe Florida Homes, a few things, but really not a lot until now. And so again, this stabilization's been critical to give people a place to make good decisions going forward.
The articles we were working off of, the legislative victories, $230 million to help Floridians harden their homes and condos to hopefully save on insurance. And my question when I read that is, was that really a true sticking point for the insurance companies on raising their rates? Was they didn't think, there was all these homes that were not, had a good enough roof on them or whatever, windows or whatever it may be?
I do think that, first of all, there's very little we can do, right? There's very little that Tallahassee can do. I mean, insurers are looking at their companies, are public companies, they're for-profit companies. So what they did actually was really, I think, a brilliant use of our money. And yes, the thing is that many people are facing insurance companies that are saying, replace your roof or lose your insurance. And so the ability to have someone get helped in that, and the way the My Safe Florida Home worked is it would cover up to $15,000. You pay $5, they pay $10. Or if it was less than that, they would pay $2 for every $1 you paid. And so what they experienced over the last 2 years was, on average, people were saving $1,000 off their insurance bill. So just under $100, but it was a positive trend, right? It helped them but I think the other piece of it that is on the legislators' minds, on people that understand minds, and going through a busy hurricane season last year and the promise of, or the prediction of one this year, is we also want our neighbors to be in safe homes. And we know that a good roof is going to protect the home from having water damage, from having things, blow out. I mean, that it is the single best thing for resiliency. So I think health and safety was a part of it. And then the ability to also help, because again, if you look at places like in Fort Myers where people had to newer standards, there was less damage after the fact. And I think that's everybody's goal as well. It's not just the rate, but let's minimize what might be needed going forward, which will keep our rates moderate rather than if everybody is at a full loss, we're going to see rates react to that too. So I think it was a really good program. And up until this year, it was open to everybody that it was their primary home under $700,000 in value. They did some tweaking this year. And the tweaks were, they wanted to make sure that the people in the most vulnerable, the lowest income, the least able to do it, would have the first shot at the money. And so for the first 60 days this year, people that are in that lower income bracket have the chance to get access to that money first, and then it'll open up. So if you as a realtor or a mortgage person or a neighbor know somebody that, financially has a tough time and might be in that 120%, that average mean income, or, look at the rules, but somebody can look it up for you. The people that typically qualify for down payment assistance, those people can get this work done first. And I believe, I've not seen the new plan yet, but I believe there's even an ability that they may not have to match it. So really, now is the time to make sure your home is as secure and resilient as possible and as hardened as possible.
I want to flip over to condos because they're seeing their fees go up because insurance is becoming, hitting some of these complexes more than others. But it's Florida, we have a lot of condos. It's there, but now all of a sudden they're not that they were always affordable. Everyone always says, "Oh, can I get a condo versus a single family house?" Well, it's a lot of times when you factor in the fees because they're taking care of a lot of stuff. It's not, the condo price point might be lower, but their cost is, not much different than a single family home. But insurance is starting to, become a factor there. What are things that, if things going on as far as trying to, tamper down the condos going out of control?
Well, I think all of us that are in the business have a lot of concerns over condos and what's going to happen in the next 5 years. And I think there's two pieces to the insurance. One is, again, like a home, the value of properties have gone up, and they're looking at kind of their hardening and their resilience with a bigger microscope or magnifying glass. And they're finding that they need more insurance. And so that it is costing more. Right now, this year, Citizens, it's called residential commercial. That's what a condo is. Residential commercial is the largest growth in Citizens because there's no other place. The people are not writing, third parties are not writing. But I also think we have to be honest that part of that insurance reflects the condition of the properties. And so for places like Pinellas County, which has an older housing stock, many of these condos are at greater risk for a claim if you were built in the 70s and 80s. And now we have that statute for the milestone study to just look at all the systems, much more so than we did in the past. And in addition, mortgage people and insurance people are more concerned about the asset that they are putting their money behind. And so there are reasons why people are charging more. And again, I think that's going to be one of those points that we're going to still see pain around. And the other thing that you didn't say, but you know this, is in condos, the challenge we're having, we brought it to Florida Realtors' attention, is FHFA will not do warrantable condos if you have more than a 5% deductible for insurance. And so the insurance companies are asking for 10% many times, which the condos understand and we're happy to do. But if all of a sudden you no longer have access to that 30-year mortgage, that's problematic in many ways. And so we need to be able to educate at the federal level why a 10% deductible actually makes the property more beneficial, because it means the owners are taking a greater stake in not having a claim, right? Doing the preventive stuff that they can do. Maybe as a condo association, maybe that roof gets done a little quicker. Maybe they decide to do hurricane windows as a condo association and work towards those things. So I think that one's going to be one that's still going to be an area for us to watch and work through. And there's a lot of pitfalls for potential buyers. And I tell you, I would not be buying a condo without a realtor that really dug into the milestone, the minutes, the agendas, the insurance, because you could be looking at a really bad
10% in reserves, right?
Right.
Yep.
Right. Mm-hmm. Right. Yeah, absolutely.
I know we talked a little bit about before, but I know it's something you're passionate about. And, to go back to flood, and we'll finish here because we're coming up right on an hour, they budgeted $500,000 to research this. And that's the look back on these homes that are in flood areas, if I'm asking that question correctly. I know you know what I'm asking, but.
Yes. I'm going to pull over a little quickie here. Let me see. 1, 2, 3, 4, 5, 6. I need 6 pens. Okay. I'm going to show something by example because it's easier to say. So when you live in a flood zone and you're under that 50% rule by FEMA and you go to get a permit, FEMA says you cannot improve your house at any time more than 50% of the depreciated value of the home. For instance, I bought a home in Madeira Beach last year. It was built in 1950s, and the price, because the land is expensive, they told me the house was only worth $250. That's what it's insured for with my insurer. Well, FEMA said the depreciated value of that is $131,000. So I could do $61,000 of improvements before I had to tear it down and start over or elevate it. The problem is to elevate a house right now in Pinellas County is about 3 years and about $400,000. So the average person, that's not even a real option. Like, let's just be real. Somebody's going to take that house, tear it down, and somebody is going to build a McMansion. So here's why the look back period. I asked my friends in Fort Myers, Cape Coral after Hurricane Ian, what did you learn that we need to know? And they said, we did not understand what we had done to ourselves with the look back period. Cape Coral, Fort Myers, Bonita, they had a 5-year look back. And I'll tell you what that means. It means that all the costs are aggregated over 5 years, and I'll show you what that means. In Sarasota and Manatee, they had a 1-year look back. So what happened is the storm comes and there's damage. But imagine this, you've owned a home for 5 years. You put in hurricane windows for $20,000. You put in a generator for $5,000. You put in a new water heater for $2,000. And now you have damage and you only have this left. And when you have damage, they count the cost of taking stuff out against the 50%. Now, imagine you lived in Sarasota, Manatee, and you had a 1-year look back. The storm happens and you haven't done anything in a year to your house, you have all of this. Plus you have this, because if you look, their value was pegged 5 years ago when they started. So imagine what the value of a home was 5 years ago or what it is today. So the reason people did it was because the look back period would give a greater discount on something called the community rating system discount. And prior to risk rating 2.0 in October 2021, you could say if my flood bill was $5,000 and I got a 20% discount, I would only pay $4,000. I'm trying to do easy math here. Well, once we did risk rating 2.0, that $1,000 went away in most cases. I've been collecting flood decks and they're about $100 or less because basically, let's use my home for an example. If I didn't have FEMA's flood insurance, my flood insurance would be $12,000. I live in a flood zone. With FEMA, it's $4,000. So what FEMA says is, I already gave you $8,000 in savings. I'm not giving you another $1,000 down here for a CRS credit. Totally makes sense. But a lot of communities haven't looked at that since they set it in place, and the rules have changed. And now, like Cape Coral and Fort Myers, if you read the news, they're risking losing all their flood insurance discounts, losing access to FEMA, and also the resiliency to recover like other places. I'm so grateful to Representative Linda Cheney, who is my representative and took this issue up and brought the issue to our state legislature. And ideally, we would like to see across the state 1 year or less and let people be resilient when something happens. So again, that is kind of the process. The look back means how far back do they aggregate all the 50% costs. And when you look at how much things cost to repair, it puts people in a really bad the longer you look back. And if you want to know, in reality, the city of St. Petersburg, which is our biggest city here, has zero look back. So their people are even more resilient. And so again, I just think that, one of the things that's important about advocacy and governing is what was important and doing something valuable a few years ago isn't doing the same thing. And are we unintentionally hurting our neighbors? And so super proud of my son. He took it up as his capstone project. He's graduating May 15th with public administration and advocacy, and he did it for a city of Bel Air Beach and was able to just show them that there is definitely time to relook at it and understand what would be the pro of keeping it versus the con. And again, the residents and the city commissioners, once they understood how things had changed, were very complimentary and moving forward to make their cities more resilient. The final thing I will tell you is this. Every city is different. We have 26 in Pinellas County. We started asking over a year ago, what is the look back period? And there are still 10 places in Pinellas County that haven't been able to tell me. So what does the average consumer do? Yeah. And also, when you look at some of these that have a 5-year look back, Treasure Island was talking about a 10-year look back. We need our residents that are voting for those people making those decisions. Those $1 million homes just became worth only land value. Because if I'm in year 9 and I've done a bunch of stuff, am I going to pay you $1 million, $2 million for a house I'm going to have to tear down because if something happens, I've got no capacity to make an improvement or change it. There's really big issues and really costly impacts to consumers that are not understood. And so thank you to Rep. Cheney for taking it on and helping me educate and Florida Realtors educate people on what we didn't know. But that's the benefit of talking to other people around the state and helping to see what do we not know that we don't know and get prepared. That's my hope, is that we can help others be prepared when, God forbid, something happens.
I don't think, well, we know that, well, they're not doing the numbers. They think it looks good to save a couple of bucks today, not realizing the catastrophic, penalties of that situation. And it's great. I go out to my voters, hey, I saved you $20 today, but 5 years from now, you could, you might be moving out of your home because you're not going to be able to, lift that house, spend all the money, to do it because a catastrophic storm. So you're rolling your dice and playing roulette, and your ante to play is $20 today, but could cost you losing this home, which could be a family home that you've had for years, whatever emotional attachment, or just, that was just your dream home you wanted to retire in is now gone because, you wanted to save $20 5 years ago.
And I think one of the biggest challenges in the messaging, Pinellas County got the highest discount rating to 40%. And so the news and the people and the floodplain manager were talking about, we are saving consumers 40%. But I went to Terry Parker High School near you, and 40% of zero or 40% of $1 is not very much. 40% of $100 is not very much. So as the average consumer, I think we've got to get out of talking percents because, again, in coastal communities, there is absolutely no gain. There might be a slight adjustment the first year because people that are grandfathered might see that they might have a little fraction. But I've been collecting for over 18 months in Pinellas County, and the average person from a $200,000 home to a $2.5 million home, that CRS credit is $0 to $100. And if you ask most of those people, would you give up $100 a year to be able to save your home? They would say yes in a heartbeat.
Mm-hmm. You make me, because I remember when I first heard about the look, I didn't quite, which I think is everyone. I think it was the same presentation. I was at the St. Augustine board, and they were presenting, and that's when they said everyone should have flood insurance. And then the whole look back period, especially those in St. Augustine Beach area, and raising their houses and so forth. And if you don't live out there, you're like, oh, whatever, because I do live on the west side of 95, just on the west side of 95. So it's not really a big concern to me. But those people on the east side of 95, I guarantee 99.9% of the people have no idea how this actually affects them on a day-to-day basis. They assume these government people who are making these decisions in these boards are very knowledgeable, and I would have to say that maybe some of them are, but not enough.
Well, I think the important thing to give grace on is things change. When risk rating 2.0 changed, the way that benefit, and the only reason that I could figure it out is because, one, I was sitting at the table on risk rating 2.0 up at NAR, and two, every day I'm with people in a flood zone, and I'm like, these dots don't connect. And so I kept asking questions, and I kept digging in, and we finally got an answer, but I don't know the average person could have gotten an answer. But now that we know, I'm on a passionate mission to help educate across our state, people to know, hey, you need to look at it. And it's in the code. And a lot of times it'll say what you can do with substantial damage or improvements over 1 year time or 5 year time. So they don't even make it easy, which at a minimum, we should have every municipality have to post what it is. And I will tell you that there's a city in our area, Safety Harbor, that has a lifetime look back. And now that I know that, I would never sell. I would inform every buyer, understand you probably got land value right here. Yeah. But again, what I got concerned about is what happens to realtors that sell properties. And then because Any improvement stays with the house, not the owner. So somebody, everybody loves the renovated house. You move in, you're like, I love this house. Now you decide to do something and find out you're over that. And you got to wait 5 years for anything to happen, or you lose everything. Or the insurance company says, oh, well, they did all this, but you need a new roof and there's no capacity to do it. I'm going to tell you a real world story. The president of the Pinellas Realtor organization last year, his daughter bought into town and she bought a renovated house. She was young, pregnant, had a baby, and everything was great. 2 months after she moved in, the AC quit working. And she went to the city to get a permit, just like a good resident would do. Mm-hmm. And they said, there's no capacity. You have no 50%. You can't. It was like, okay, but that's health and safety in Florida, like mold and all this stuff. Anyway, her dad, being who he was and knowing people, went down there and I guess, helped them understand the health and safety aspect, got her to be able to fix it. Can you imagine being someone who isn't allowed to get a AC for 5 years?
Yep. Not connected, don't know what to do. I mean, can't afford an attorney, it would be sitting there very stressed out. And yeah. And that is something that common sense is like, I can understand someone going in and physically wanting to change the house, so they're going to renovate and do construction, whatever. But like you said, the health and safety things, the roof, the water heater, really? That's going against that look back? I mean, and AC, I just don't understand that.
Right.
Yeah.
Right.
Yeah.
So there are people doing carve out. Some cities are carving out roofs or carving out. So that's a potential. Some people are carving out after a storm, going to zero. So meaning they're trying to manage the renovation piece, the updated kitchen and baths. But again, it's not transparent. And I would like to see at a minimum, even if we can't get to 1 year across the state, I would like to see every municipality have to post what it is so their residents can have their voices heard, how they feel about that and understand the impact. Because I will tell you, there's a lot of properties that are becoming basically land value. Because again, and the reason we're having a train wreck is because it didn't used to cost $60,000 to put on a tile roof. But if you live in a neighborhood with a deed restriction for a tile roof and you have a 5-year look back and the insurance company says you have to get a new roof, you may have just lost your house. Right. You may have gone from having a house that is your equity and your future and your retirement and your safe haven to nothing. And you owe the mortgage person.
Let's play through that. So the roof, who knows, maybe the previous owner, did some work on, in the last 5 years, maybe even get it ready to sell, right? Maybe they renovated it to sell. And then all of a sudden, you're there 2 years and, the roof's damaged, hot water, whatever it is, all of a sudden you can't get a permit. Now all of a sudden the insurance company is saying, yeah, the roof is now too old. You need a new roof or we're not going to insure you. You're in a pickle. What do you do?
Right.
That's, yeah. I'm actually going to look up St. Johns County and I know.
Definitely tell me what it is. I keep wanting to learn, so that'll be good.
Yeah.
Yeah.
Well, and I know I want to get this episode over to one of my neighbors is running for the House of Representatives seat that's open here. And I told her that insurance is a big player. Knowing what's going on in insurance and educating people is going to get you an edge, especially real estate agents,
right.
And the influence that real estate agents have over a lot of voters that they're working with. So, Cyndee, I appreciate we're going hour and 15 minutes. Lots of information.
I appreciate you. Thank you. Thank you for the opportunity.
Anytime something new comes up that we need to get, I don't care if it's 15 minutes that you say, hey, I got to get this out. Give me a call. We'll go live and we'll talk about it because this is great stuff. And hopefully we just educated. I know a lot of my followers are here in Northeast Florida. We're hopefully going to expand that. But, insurance, we've got to be on top of it and educating our buyers and sellers doing. And this look back period is definitely one of the many factors that we need to adjust in our insurance.
Absolutely. No, it's a looming time bomb. And like I said, I don't want to be there again. Like you asked me, I care because I want people to be able to be safe in their homes, right? I want them to be able to live there. And so these things that threaten it become important to me to try to make sure that we're at least educating people to make smart decisions, whatever's right for them.
Yep. 100%.
Thank you.
Thank you, Cyndee. You have a super day. Talk to you soon. All right. Bye-bye.